Good morning, traders. This is your daily market breakdown on the GBP USD. I'm on the daily time frame. We saw some extremely strong movements on the US dollar, pushing the GBP USD down. This is in light of the stronger than expected non-farm payrolls that came out. I think it was around the 170K mark, whereas it was forecasted to be around the 80K mark. What we can see on the technicals, though, is that the price pushed up. There was clearly a pullback. I think that was to roughly about the 0.5 fib. And then it started to push down quite aggressively, breaking market structure. And it has now entered into this verified weekly demand zone. It may drop a little bit more toward this 4-hourly demand zone before seeing a potential pullback. And then we might see a continuation into the downside. So what I am looking for at the moment is a short-term long position because of this reaction on the lower timeframes. But overall, I am bearish on the GBP US dollar. If we head over to the euro dollar, we see something relatively quite similar where the prices come up. It had quite a substantial amount of resistance around this area. This was over the last couple of weeks. Finally pushed down. It came in for a very shallow pullback and now is pushing down even more aggressively. And so what we could end up seeing is that the price may retrace back up to this area or just before this area before then pushing down even more, maybe into this zone or even a little bit further, whereby we would then see a more deeper pullback. So this is my play on the euro dollar. This is exactly the setup that I'm looking for at this point in time, potentially looking for an initial reaction to the zone that we're currently in, where it may push up higher. Maybe the London session, when it starts, it might push the price back toward these opens up here. And then I will be looking for a short and just riding this price all the way down to where potential liquidity is resting. And then I will reevaluate on the lower time frames whether I then want to enter into a long position trading that potential pullback. Heading over to USD JPY, we have now retraced back into that strong area of supply. This is exactly what we've been waiting for over the last couple of weeks. We didn't want to enter into this precarious, fragile currency pair. And so I wanted to wait until it retraced back up into this zone or this area. Now, what could occur is we are seeing a lot of the news and the speculation around the talks failing between the US and Iran. And so this could actually now start to push up just a little bit higher before the Bank of Japan enters and starts to rebuy back their yen. So what I would be most cautious on, what I'm looking for the most, is what is happening at this point in time on the lower time frames. If we begin to see changes of characters on the lower time frame, we see a market structure shift pushing down, then we know that the price does in fact want to continue back into the downside and reverse into that downside. I would then look for shorting positions. If we see a continuation into the upside, then I'm just going to have to wait and reevaluate. Again, I'm only looking for short positions because of what happened with all of this manipulation. I'm too afraid to enter and then just get stopped out. So USD JPY is still on my radar or my list of I don't really want to touch at the moment, but that is what I would be looking for on the lower time frames. I'll be looking for those shorting positions at the moment. Heading over to the DXY, it is now playing out beautifully to our technical analysis on the daily frame. So what we can now see is that there was a huge strong push into the upside. This was largely driven by the better than expected non-farm payrolls that came out last Friday, as well as an unchange on the unemployment rate, and the peace deals are now breaking down. And because the US economy is looking stronger than expected, then the Fed may now increase interest rates because I think they were a little bit nervous about increasing interest rates if the job market was stagnating. So now this is what a lot of that growth or a lot of this push, where that is coming from at this point in time. We can see that the price had now retraced back into this area of potential liquidity, and we are now seeing that initial reaction to that liquidity. What's also formed is, as you guys can see, any fair value gap traders is this massive fair value gap that has been left behind. And so we may see a retracement back into the zone before pushing up even higher. and that would play very nicely into a lot of our major pairs. So on the lower time frames, I'll be looking for those shorting positions and then looking for those long positions. Very similar setups that I'm seeing on all of the other major currency pairs. Heading over to XAU USD, so gold US dollar, what we can expect is a continuation into the downside because the DXY is strengthening. So what we are likely seeing now is the price is looking to retrace back down into our weekly demand zone over here. It has now formed a new supply zone because it has broken market structure. So there is potential liquidity now resting above this area. What this means is that if we could see a continuation into the down, we could see a pullback back up to this zone or just before this zone before then pushing down even more. Okay, so that's what I'll be looking for at the moment. Today is that overall entry point into a shorting position, and I would look to do something such as this, putting my stop just above that potential liquidity zone and targeting one of these new lower lows, potentially just below this lower low over here. And now we might set up on gold throughout this week. Heading over to BTC, we've just seen it fall off an absolute cliff. Look at that. It's just pushed all the way down. This is a daily frame as well, but it is respecting this potential weekly demand zone. So what we can now see is that the price had come down. It had a strong reaction to the zone. It's now pushing itself back up. Where it's going to continue pushing up to is anybody's guess, but we could be looking at pushing into any of these fair value gaps. So it could go to here, it could go to here before then continuing into the downside. So I'm still relatively, overall, I've said numerous times, I wouldn't be surprised if BTC returned to the 90,000 mark sometime this year. But at this point in time, it is looking relatively grim for BTC. Everybody seems to be panic selling. Now we're just trying to find where the bottom is, where is that support, and we might have found that support because according to price action, we can see that these candles are producing long wick candles followed by an aggressive push into the upside. This could be the reversal point. So this might be an interesting area on the lower time frames to look for those long positions back into those upsides, right? So yeah, precarious market, absolutely 100%. Very risk-off type of asset, isn't it? So, very risk-on type of asset, financial instrument. So you just want to play it by ear and be very, very cautious here. But this could be that area of reversal that we have been waiting for. And there it is, traders. That is your daily market breakdown.